Hi, and welcome back to class. Today, we want to discuss the depreciation schedule. We want to see how we can build up and forecast a company's depreciation expense from a depreciation schedule. In our previous classes, we have seen how to forecast the revenue. We've seen how to calculate the revenue, build the revenue schedule by calculating the prices, the volumes, and ultimately getting the revenue. Then subsequently, we went ahead to see how to calculate the operating costs. We saw how we could, or how we can calculate the cost per unit. And under that, we calculated the variable cost and the fixed cost per unit. Then we went ahead to calculate the cost in money value. We saw how we calculated the variable cost in aggregate value and the fixed cost in aggregate value. We also projected the selling, general, and administrative expenses using the cost inflation to forecast that. So today we will go ahead to calculate our depreciation schedule. So before we calculate the depreciation schedule, or we build our depreciation schedule, let's go right ahead and take some notes about the depreciation schedule. Now let's see how we can. Now let me know, what do you think is, first of all, what is depreciation? Control Z. What is
Reduction.
depreciation? Say that again. I don't know.
Reduction in the value of an asset.
Okay, as an accountant, what do you think is depreciation, or what do you do when you actually calculate depreciation?
We deduce it from the assets value, like the cost of the assets.
So basically what you are doing is you are spreading the cost of that asset over its useful life. Is that correct? Hello?
Yes, I said yes, you're spreading it over the useful life of the assets.
Yeah, so for assets, when we acquire an asset, we don't just use it per year. I think there is this concept in accounting called matching concept, right? That means a cost that is associated with this particular financial year is what you record for that financial year, So
Yes.
for an asset, you don't, for example, if you buy a laptop and you're using it for your business, or a company's laptop or computer system, I'm sure that they don't just apportion the cost of that laptop in a particular financial year. They spread it over the useful life of that laptop. Is that correct?
Yes, I am.
Yes. So that's the basic idea of depreciation. So um, companies have the importance of calculating depreciation or building a depreciation schedule is because companies have fixed assets and depreciation. They have fixed assets, so they need to depreciate, right? So let's make some notes. Right. So the various types of depreciation the various types of depreciation schedule, or the various names, right? We have
It's
let, let me say um other names, right, for depreciation schedule. Other names for depreciation schedule, right? So what do you think are the other names for the depreciation schedule?
what that means.
Mm-hmm.
I know the dash, just for the reducing balance. Is that what you're asking?
No, that's not it. It can be called depreciation schedule, right? It can also be called capex,
How much Capex?
capex and depreciation schedule. Some people call it fixed asset schedule, right? In your office, I don't know what you call it. What do you call it? Do you keep a schedule for your
As-
fixed assets? Hmm?
as- Yes.
So we call it fixed asset schedule, right? So in your fixed asset schedule, what are the things you find in your fixed asset schedule?
The date the asset was gotten.
Okay.
Can you hear me?
Yeah, I can hear you. So basically,
Oh,
let's discuss some important things that we can find in the fixed asset schedule. You find your capex. Capex is your capital expenditure. Let's write it in full. Capital expenditure, right? Mm. Also known as capex. So when we write capex, we are talking about capital expenditure, right? So what else? You find your depreciation. What else can we find in our fixed asset schedule?
disposal.
Okay. Of course, you find that's if you're talking about the capex schedule. So, but in a holistic way, we want to see some of the main headings or main items, right, that can be found in the in fixed asset schedule. You can find your fixed assets forecasts. For example, this one is the amount the company wants to spend in acquiring fixed assets in the future, right? That will help the financial modeler to actually know what they want to include in their forecast in the subsequent years, in the future years, in the years under forecast, right? So if, for example, the company spends 500 million in acquisition of assets last year, and this year or next year they want to spend maybe like 700 million. So you should have it in your fixed asset schedule, right? So that you can use it for decision making, right? So goodwill is another, item that you can find, you can prepare a schedule for. Goodwill is an asset. Do you know that? You know, right?
Yes.
Yeah, so you can build a schedule for goodwill. You can also build a schedule for intangible assets, right? Intangibles, intangibles, right? Intangibles are assets like software.
Yeah.
Can you give me more examples?
Goodwill.
No, no, no. I mean intangible assets. Okay, goodwill is also an intangible asset, right? Yeah,
Yes.
yeah.
Then
Software, legal rights, right?
trademark,
Trademarks
patents.
and the rest. So so most times, sometimes you can have this one in one schedule. Most times you have fixed assets, forecast and depreciation and capital expenditure. Because yeah, capital expenditure, right? And depreciation or depreciation and fixed asset forecast, in one schedule. So that's it. Basically, these are some key things in your fixed asset schedule, right? So let's see what are the steps we can use in calculating our depreciation schedule so that when we actually start calculating our depreciation schedule, you will keep that in mind. So what you already know that when I talk about the fixed asset schedule, I'm talking about the capex and depreciation schedule. You know that, right? So the first thing
Yeah.
you do is you depreciate you depreciate your existing assets. Of course, they're already going through depreciation, so you don't forget to depreciate them. The second thing is just to depreciate the new assets. You add up these two depreciations and you get your depreciation value for the year. The depreciation, the depreciation figure goes into your income statement, right?
Yes.
So it is used to reduce the value of your PPE, PP&E, and the PP&E figure finally goes to your balance sheet. Then that depreciation figure actually goes to your cash flow to be added back to your net profit for the year. Is that correct?
Yes.
All right. So we have different ways of calculating our depreciation expense. I know you tried making reference to that before. Let's say types of mm, you know ways to calculate So different companies use different ways in calculating their depreciation expense, ways to calculate the depreciation expense. So the various ways to calculate this includes, you can remind me, we have straight line, right? Straight
Yeah.
line method.
Using balance.
I know I've come to accountants, uh, things
Funny, I was just
accountants
like,
can really relate with, right? Reducing or declining balance, right? Declining balance. Right. So what else? Double reducing balance or double declining balance. So which in accounting, whichever method you choose to use, you need to be consistent with it, right? It won't be good. It's not in financial reporting, you shouldn't start using straight line methods 1 year and the next year you start using reducing balance methods, right? And the next year you choose to use this other method. You need to be consistent, you know. Then if there's any need to change to a new method, you need to state it in your notes to the account. Is that correct? You state it in
yes,
your notes to the account and subsequently you stick to that method, right? So in financial modeling too, you don't just play around with methods. You need to know which method the company you are working on or working with, the method they are using to, depreciate their assets, whether it's straight line method, but most times, most people use straight line methods or declining balance method. So let's go to our assumption and see what assumptions we have for the CAPEX. Oh gosh, I've not built out my assumptions. So let's quickly do something. It's always good to just build all your assumptions ahead of time, right? Let me see. I'm going to open this up. Let's see what assumptions we have for this. So once you replicate your assumptions in your assumptions tab, there's no need to be going back to this case study over and over again. So let's build it up. We have our capital expenditure. We said that the company plans to invest 16 million on Capex in this year, just like that. So let's see, capital expenditure in $1 million. So let's put it that way, $1 million, right? Let's see, 2017, this is an input. They plan to spend 16 million, right? The next thing is what? 2018, how much?
20,
17 million. Can you see the screen? 17.3, 17.5,
2020,
18,
point zero.
2021.
This
Yes.
20, is it 2021?
Yeah, can you see the screen? If you can see the screen,
Yeah, it's 2012, but I guess it's an error.
yeah, it's 2021, sorry.
Okay.
Yeah, so since it's an input, you can see that we typed it by ourselves. All right, so you make sure it's reflecting the input, use an input style, right? So what else were we given? Right uses the straight line. So straight line, depreciation method is straight line. So depreciation methods. Mhm. So I'll just take this one. I'll just take this one. Control X and Control V. The depreciation method is straight line method. It's just a note. Do you understand? Just note it. Straight line methods, right? The method of depreciation here is straight line method. Underline. What else were we told? Existing assets have a remaining useful life. So let's make a note for our useful life. Control V, the useful life. So we have the existing assets, the useful life for the existing assets, and the new assets, right? Excusez-moi. So remember this, the unit here is just the number of years, right? That's for the the useful life here. Control D. So I want to use Alt 4 and make it an explanatory text here, right? So for existing assets, we said they do have a remaining useful life of 25 years. Is that true? While the new asset have a will be depreciated over 30 years. So we'll put an input here. For the existing one, 25 years, right? Then the
Yes.
new one, 30 years. So this is also an input because they are single values. So we'll just keep them under this column, right? Assuming we'll be having different values, just like this capex, that's capital expenditures over the number of years we have here. We had to like bring them here. But, for this case, as at when we are speaking, the existing assets have a remaining useful life of 25 years and new assets that will be acquired will last for 30 years. So we show that as an input. Inputs are hard-coded assumptions, right? So let's see what's the other thing here. So that's what we have here. So let's go back to our workings. So this is Capex and depreciation. Let me see what it is. Let me write it. Let me remove this thing. Hide. Yeah. Okay. Okay. So this is Capex and depreciation assumptions. Right. So let's copy this line. Control C. Let's go to our calculations and put it here. Put it here. Control V. And this is our Capex and depreciation what? Calculations or schedule. Let's call it schedule. Schedule or schedule, anyhow you pronounce it. All right. So, because we are working on this tab now, we don't want to always be making reference to the other sheets or to the other tab. So we will just repeat what we have there. Just repeat it and link it. Right. So link to let's link to what we already have there. Let's see. Let's use control function arrow up again. You can see here we have this capital expenditure. So I want to replicate it here. So I'll just use an equals to, use control function arrow up again, and come to this. Just link it and press enter. I want to copy it, then I know I have something here. What do I have there? Nothing. Do I have something here? Yes. I want to do the straight line methods. I know I have something here. Control V. It's a useful life for this too is the existing. Right, what else do we have there? Existing. Do we have something here? Nothing. I think that's all. Right. Let's see. I think that's all. Yeah, so let's delete this. So let's just copy, right? Since we already have this, you know, capital expenditure, the units is this, and we have the forecast. I mean, what the management thinks we will spend over the years. So since we have this, and we know it's linked, these values are linked from another tab. We place it as linked cell. We show that they are linked cells, right? So for this straight line, of course, nothing is here. We know it's just a note, right? For this one, we know we have control R, we know we have values here, right? And these are linked too. These values are linked. These values are linked. Alt for yeah, these values are linked. So what else do we do? So we go straight to our calculations, right? So let's prepare our depreciation schedule, right? So we already have our capital expenditure, right? So this is our PPE. Let's see our PPE. Our PPE schedule, right? So let me bold in this. Let me build in this. This is our PPE schedule. So, but let's look at our PPE from our balance sheets. What do we have in our PPE balance sheets? So when we want to prepare our PPE schedule, we always want to know what is the beginning balance, right? What is the beginning balance? Remember when we were doing our introductory class, we talked about how to prepare some schedules. We have beginning balance. We talked about the base methods, right? The A stands for what? Additions, right? And what are
Yes.
those additions? Additions are those new assets that were acquired. That's the capex, right? That's capital expenditure. Then our S is subtraction. S subtraction. Remember, subtraction. God have mercy. So in this case, what is your subtraction? That's your depreciation, right?
Yeah.
Remember that. Go and review that video. Then the E. E is always the ending balance, right? So, and these are actually aggregate figures. They are naira, sorry, dollar values, millions. So we'll just come here and put them here. Control V. Oh gosh, Control Alt V. Values. Right. So I want to make all these ones explanatory text. Alt 4. So look at this now. We have our beginning balance, right? Our beginning balance for the forecast year. This balance, remember that this 2017 will be equal to the ending balance of PPE in 2016. Remember that. But then with what do we have for the ending balance in PPE in 2016? Right? You will get that from your financial statements. Let's go to our model. Let's go to our balance sheets. See our PPE, net PPE. This is 2014 balance, 2015 balance, 2016 balance. Remember, this is the closing balance. This is a balance sheet. This is the closing position for 2016, right? So that is what we bring here. Is that it? Let's note that it is a linked value. It's a linked value, right? So your beginning balance for 2017, we have said that it is the ending balance for 2017, sorry, for 2016. Is that correct? Press F2. You can see we linked it, right? So what is the addition or the capex? Can you guess what it is? It is the capital expenditure for this year, 2017. Can you see it? Can you see where we are getting the figure from? Let me know if you are getting that.
Yes, I'm answering you. I didn't know I was muted.
Okay, all right. So what is our subtraction? We don't know our depreciation, so we'll go ahead and calculate our depreciation. So we are going to come back to this. We are going to come back to this. Let's go to our home and fill this. Let's fill this. Let's see, let's fill this. We are coming back to this. Right, we are coming back to this. So the next thing is ending balance. Our ending balance is equals to, of course, this, the beginning balance plus the addition, that's the capital expenditure for the year, minus the depreciation we are going to calculate here, and that's our ending balance, right? You just drag it to the end, Control R, and you have your figure. So we are coming back to calculate our depreciation. Let's bolden it. Let's use Alt H, B, and let's use C. Right, so yeah, so let's do our depreciation calculation. Remember that our depreciation method is this. Don't forget that. So what we can do is, since we want to calculate depreciation, I'll cut it and bring it here. I want to bring it here. Right. I'll close up that space. Don't want that gap. Control minus. Right. So remember we got it from our assumption. So our depreciation method is straight line and our useful life. So I want to also bring this because it relates to the depreciation we are going to compute. So I want to bring it here, right? I'll Control V, right? Control minus. So our useful life is this. For the existing assets, the useful life is 25 years. For the new assets, the useful life is 30 years. So let's go first and depreciate our existing assets. Remember in our notes, let's go to our notes. Remember, we said that if you want to calculate your fixed asset schedule, you first of all depreciate your existing assets, then go ahead and depreciate your new assets. So let's go ahead and depreciate our existing assets. So let's say depreciation of existing assets. So how do you depreciate your existing assets? Remember, the depreciation method is straight line, right? Is
Yeah.
that correct? Yes. So
Yes.
so first of all, you need to know the value of your net PP and E. let's go to our model and select that. Our net PP and E, what is the value? Let's Control C and come here. In 2016, oh, it's not giving us, let's just link it. Go to the model. This is our net PP and E, the last financial year, right? This is linked, Alt 4, links value. So since it's straight line method, how do we calculate the depreciation, right? So I want to repeat Control C. I want to do this Control Alt V. I don't want to write it again, right? Depreciation of our existing assets. Remember these two are in millions. Control C, Control Alt V. Right, so I want to calculate this. How do you calculate depreciation now? Since it's straight line method, is simply the value you have here, right? Since it's a single cell value, you press F4. All right, so to calculate the depreciation of existing assets, right? We said, first of all, we need to know the value of our current property, plant, and equipment, the net value. That is the value after depreciation for that particular year. So our last financial statement figure for PPE is this particular amount here. Remember this last figure here, that's $397.7 million, right? So we can see it's a linked value. So what is now our depreciation of existing assets? You want to depreciate your asset for which years? For 27. Oh, so sorry. This value here is for 2016. Remember, so don't get it twisted, right? This value is for 2016. Is that correct? Check.
Okay.
Control left square brace. Let's see. You can see it's 2016 figure. Can you see it?
Yes, I can see it.
Yes, that's the historical figure. So what your existing figure, your existing PPE is what you are depreciating under this one, under your existing assets depreciation. Right. So you go right ahead and depreciate it. So since we have an existing figure here, right, your historical figure, your last financial statement figure here, and remember our depreciation method is straight line. So how do you depreciate under straight line method? Can you remind me?
Costs minus depreciation value divided by 5 years.
So what you just go ahead is you say this net book value here, the net PP and E, that's the net book value. Remember, because okay, let's just finish this. The net book value over what? Remember this here, existing asset useful life over the number of useful life. Oh gosh. So sorry, let's take that again. Equals to this net book value over what? The number of useful life. Right. Enter. Now we are going to spread it over those years. Now it's not working. Why is it not working? Can you tell me? It didn't work for the subsequent years. Can you see? Because of what?
You didn't look.
Yeah, because of the cell referencing, right? It did not lock
Yes.
or fix. So let's go back to this. So tell me, what are we supposed to do? What are we supposed
We
to
have
do?
to look this the
Okay, both of them should be locked, isn't it? Because
yes.
this one, we are not moving. We are not moving. So just press F4, right? For this one too, we are not moving since it's the useful life. Press F4 once. So that is what we should actually have. Mhm. So let's press R. So we've calculated the depreciation for our existing assets, right? Right. But there can be a situation whereby the depreciation you are calculating is more than the net book value of the assets, your existing assets, right? For example, if we have, for example, if you have the existing assets, the useful life of the existing asset to be, let's say 3 years, you can see we are altering this. Now let's look at our depreciation of existing assets, you can see when you look at the sum of this, look at the bottom of your tax bar here. You can see the sum of all these numbers I've selected is more than this net book value. That is 662.8. Right. That means this method of calculation is not absolutely correct. An easy way to calculate this depreciation of existing assets is just to say this net book value, since we don't have the scrap value, right, divided by the remaining useful life. We lock it, then we drag it. But you can see, since the existing useful life is 3 years here now, you can see we have done an over depreciation. That means the values we have spread through our number of years is now more than the net PP and E, right? So a way to solve that problem is to use this sum function, sum. You say sum up all the numbers or all the figures from this particular cell we are in now, right? Put column and going forward, right? When you put column, it just makes reference to that same cell, right? But what you do is you just lock the first column here. Now this way, this is the way to do a cumulative of your numbers starting from where you are going forward, right? This sum function. So we are not just going to do that, write that sum function. We are just going to use our if statement and say if a sum of all these numbers that we have starting from the cell we are in now is less than this our net PPE, lock it. Then do this normal straight line depreciation, do this normal straight line depreciation. If that's true, do this normal straight line depreciation. That is what I'm doing right now. Lock it. Then if it's false, just give us 0. You close it, enter. Now, when you drag it to the right, you will notice that it gives us the same addition of addition of all this depreciation gives us our net PPE, right? Because we are modeling for 5 years, right? But then the existing assets, the useful life of the existing asset is just for 3 years. So you can see after 3 years, after 3 years, it stops depreciating. It has depreciated the net PPE over 3 years, and subsequently you have 0, right? So what's changed in this formula? Can you see this formula? What's changed?
You didn't lock both L and 79. You locked only L. Like you locked only the beginning.
Okay,
That
that's how to do cumulative, right, of your sum, cumulative sum, right? Then look at this one. We used less than. We said if a sum of the number starting from the first one is less than this net PPE, then do this normal depreciation, straight line depreciation, right? If not, give us 0. So I think this is a simple formula. But let's go back to this, our existing useful life. Copy this, paste this here. It gives us the 25 years, which is the actual figure we have in our case study. So this works for us. This is the figure that you will, you know, use for the depreciation of existing assets. Right. Now let's do the depreciation of our new assets. This is quite simple too, but you need to also pay attention to the formula. Now let's do depreciation of new assets. Now let's do depreciation of new assets. Now, because we are buying new asset over some number of years. Now let's replicate these years we have here to make life easy for us. Control R. Let's go to home and change that formatting there to, let's do it general formatting. Or we can just come here, just copy this here, just copy these years you have here. Control C and come here. What happened? Just come here and do Control V, Control Hold V. Let's do, let's link. We are pasting, let's paste link. Let's see. Yeah. So we pasted the link. I want it to look like what is there up there. So we want to calculate the depreciation of new assets. Let's see, we will also come here. We want to see the number of years. So here we replicate that we replicate our we replicate our capex. Now look at this capex here. Remember our capital expenditure that we have up here. Since we want to depreciate it over the years, now let's see how we can do that. We want to replicate that. We can use this transpose. Mm. Let's see, we can use the transpose. We want to transpose all these numbers down there. Let's enter and see how it works. You can see how it works. Can you see? Is it magic? It's not magic. Now let's also transpose these years here. Transpose. Are you familiar with that function?
Not really.
Okay. So that's number of years. Let's just make it general. Alt H goes to home, and let's use general here. N. Let's use general here. So these are the years here, years, years, and these are the additions or capex, the additions, right? So did you get it up to this point?
Yes.
Okay. So what we did here was to use transpose and replicate these values here, the years and the capex additions. So now I want to see how we can how we can depreciate all these numbers, all these additions. You didn't we didn't just add the Capex once. We're adding Capex over the years. So I want to see how we can calculate this depreciation. Since you have some additions in 2017, 2018, 2019, how will we be able to depreciate them over the years? Let's see. We said the normal depreciation is just to use, say, the the assets, right, divided by the number of years of useful life, right? Enter. Now, because this years of useful life is just one single cell, we press F4 to lock it. And this one here is is on a vertical line, right? We don't want it to leave this column, so we are going to lock that J. We put $sign, right? So, but we don't want to be repeating formula over and over again. We want it to be easier for us to drag, right? So we are going to use an if function here, right? So we are going to use an if function here. We can say if 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 this year, if the year we are in, if this year we are in, right, is equals to the year that the asset was bought, right? We want we want this depreciation calculation to be divided by 2. Why? Because we are assuming that the asset that was bought that first year might not have been bought in January. It might have been bought maybe in June or in any other month. So we are taking like we are assuming that the asset might have been bought in the middle of the year, right? So we are not taking the full depreciation value of that asset.
Okay.
Do you get it now? Did you understand?
Yes, I do.
Okay. So if the asset was not bought that first year, right? If the year we are in is not the same year the asset was bought, let's just go ahead and do the normal depreciation, which is equals to this divided by this, right? So this is it. What you can do is you go back to the formula and look for the cells that need to be locked, right? So look at this. We said if the year here is equals to the year here. Of course, if you drag this to the other columns or other rows or other cells, if you drag it, this thing will not work because it will shift. So we need to fix our reference in here. So if this year is equals to this year, of course, we don't want this year to move. We don't want the column, sorry, the row. We don't want the row to move. We want it to remain on this row, 81. So we are going to put a $sign to 81. For this one here, we don't want it to leave this column I. So we are going to put a $sign before I. Is that okay? For
Yes.
this, we've already sorted this one before we start writing this formula, second formula. So this one now, we are still going to do what we did here, right? But in this case now, we are not going to divide it by 2. It's just the same thing. Right? It's just the same thing here. Now, do you get it? So this time around, so what we want to do is we want to paste it here, then come here under 2018. We want to paste it here. Let's see, let's put our Alt H. We want to paste it here. We want to also paste it here from 2018, F4. We want to paste it here from 2019, F4, 2020, F4, 2021, F4. Look at this is called waterfall, right? So I'll show you 2 ways to go about this. This one is you've finished the formula, you just want to Control C and paste it here. Control V, Control V, Control V, Control V, and Control V. Then you want to come here and add up all this. Let's see Alt equals to whether it works. Let's check it out. F2, that's good. F2, 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 F2. Now let's see what is another way to go about this instead of going through this systematic pasting, because some people might not be able to, do this. They might not know this. So another way is to just add another if function. So I don't really like too many formulas, like too many ifs, you know. So another way is to wrap it up with another if. You can say if if the year we are here, if the year we are in, which is this year, right? If this year we are in is less than, if the year we are in is less than the year here, the year the asset was bought, right? Then you put 0, right? You put 0 before you now start writing this formula. If not, sorry, comma. If not, you do this formula. So let's lock this. Let's lock this row. Let's lock this row. And let's lock this column. Then let's put another bracket here. Is that correct? Let's see. So we want to be able to just, copy to the right, Control R, and copy down, Control D. And you see all those other places that we don't have Alt H. Sorry, excuse me. All those other places that we don't have figures. You can see they'll just automatically, delete themselves. We have 0 values there. Which of the formulas do you prefer? Which one would you like to use? Would you like the one that has double ifs or the one that has one if so that you can delete the figures yourself?
When I watch the video again, I'll choose the one I want. But I think
I can't believe you are saying this. But you think what's
but I think I'll prefer the one with one if.
one if, right?
Yes.
Why do you prefer it?
I
Because
don't know, I just
one if is better than 2 ifs.
yes.
Oh God. So you know how to replicate this, like when you go through this again, you know how we arrived at this step by step, right?
Yes.
Okay, so what we are going to do is, of course, we don't need all this coloring here. We don't need all this coloring here. So we're going to do Alt H and come here and remove the fill. No fill, no fill, no fill, no fill. We don't want that fill. Right. So we are going to bold in this, use Alt H B. Let's use C, just like this. So this is, remember this depreciation of our existing assets, right? So I'm just going to
Yes.
use Alt H B C, just like this. So I'm going to come here, Control C. Yeah, this figure here is actually Control Alt V. This figure here is this is actually the depreciation of our new asset that we've just completed here. So I'm going to use so sorry, let me use Control C, Control V. I don't want that there. So I want to Alt HBC. Yeah. So I want to do our total depreciation. So our total depreciation, yeah, which is the depreciation of the addition of our depreciation of existing assets and that of depreciation of our new assets. Did you get it? So want to know the depreciation calculation for each year, which is this. So let's do that. So we're going to do bolding. We're going to bolding them, use Alt HB. Which one should we use? Let's use this one. Right. So this figure is what we now add to, remember this computation here under the subtraction in our PPE. So we are going to, of course, remove this yellow line, Alt H and H again, right? Let's see H, no fill, N, right? So those shortcuts help our life. So we are going to link this subtraction to our depreciation, total depreciation for the year, right? When we do that, we go ahead and drag to the right all these figures here. So this was linked, this was linked. All these were actually linked. We actually linked Alt 4. Let's use our linked cell style. All these were actually linked. So this was linked from our ending balance, right? This was linked from our capital expenditure, and this was linked from our depreciation calculation. So you have your ending balance of your PPE. So where do you think this is going? This ending balance, let's discuss. This ending balance is going to where? It's going to our balance sheets, right? This one goes to the
Yes.
balance sheets. So let's look at this. This depreciation figure, where does this go to? This goes to where?
Uh,
Yeah, this goes to P and L, P and L, or P or L, and also goes to cash flow, right?
yes.
Okay, that's fine. So we have all this. This capital expenditure also goes to your cash flow here, but to become a minus figure. So let's go to our model and link all these our calculations, right? So let's start from this. Let's start from our income statement. Let's look at the lines. Which lines have we computed? We've computed revenue, net revenue, cost, SG&A. Now, cost adjustments. No, we are coming back to this. Nothing was calculated for that depreciation. So this depreciation figure for 2017, we just go to our calculations, right? You either link it here or come to your schedule here to link it. That's all fine. So we are linking it to this. Is that okay? So we are linking to this. What else? We've not calculated all this. So let's come here. So, okay, we have that. We can either drag to the right or you can leave it till the end when you are done computing. So look at it, that same depreciation figure, you can just go and link it either to the schedule or link this one to the, so since we have it here, you can also link it here, right? Yeah, so what else do we have? Okay, we don't have, so capital expenditure, let's look, see Capex here. You can see, you say equals to minus, go to your capital expenditure. This is your capital expenditure here, remember? And you are linking it to this, right? What else? We are coming back to all this. Let's go to our balance sheets. What else have we computed? We have not computed all this. We've computed our net PP and E. So what's our net PP and E? You go to your calculations. This is your ending balance, net PP and E under 2017. That's what you're picking, right? So you leave that. What else? What else? I think that's all for today, right? Is that it? So that's all. Compute the we've been able to compute our Capex and depreciation schedule where we saw the capital expenditure, PP schedule, the PPE schedule, and we're able to calculate the depreciation of existing asset and depreciation of new assets. All right. Do you have any questions?
Nah, I think I'll have to watch the video, then come back with questions.
All right. So go and, as you're watching, don't just watch. Make sure you replicate it on
Yeah.
your workbook and send it within the week. And even send it tomorrow. Yeah, have a nice day.
Yeah, you too.